Hey, what's up everyone? Ralph here. So in this video, I wanted to talk to you guys about the biggest mistake I made when it came to investing in the stock market. So if you're someone that's thinking about investing in the stock market, or maybe you've invested before, but you had a bad experience, hopefully sharing my experience will give you like a little more confidence when it comes to that. Because I think it is important that everyone should participate in investing in the stock market, given that, you know, obviously you're in a good financial place. You got all your debt paid, and you also have like emergency funds like set aside. Because, you know, before you even think about investing, you should make sure debt is paid and have at least $1,000 to start off with. And when it comes to your emergency fund, and you build that up to 3 to 6 months, you should at least have those in place before you decide to get investing in the stock market. And I plan on doing a video for that sometime in the future. But for me, when I first started investing, I think it was back in 2019. And if you watch any of my older videos, you can hear my story how I got started, where I had a lot of debt. And for me, when I started my business in 2016, and when 2018 when I started making money, I wanted to make sure that I paid off all my debt, like credit card debt, student loan debt, and then also set aside money for a security, an emergency fund. So I had, set aside 6 months of emergency fund before I started investing. And in 2019, when I had all that settled, I did my research on what I should invest in. And I went on YouTube and searched, I looked at a lot of finance people that talked about what you should invest in. And I came across, I think, what Graham Stephan, he talked about index funds. So for me, back in 2019, I got started with index funds, right? And there was 3 types of index funds that I bought. I think it was the S&P 500, it was a total stock market, and also some bonds, right? So those were like the first 3 types of index funds that I started with. And as you know, and every month I would put money into it. And for me, when in 2020 came, obviously you had the pandemic. The mistake I made was when that pandemic, when it happened in March, and the market crashed. What I did was I took my money out because I panicked. You know, being a first time investor, you're like, you know what? Oh man, like, things are going good. The stock market's doing well. And then when you have that first sudden crash, and you see your money tanking, you see the market crashing, your first inclination was like, oh, dude, I gotta get my money out. So my stupid self, I took my money out. And then right after, right, and when you take the money out, you have to wait a month to put it back in. And I was using Vanguard. I was using Vanguard to purchase stocks. So you have to wait like a month before you can go back into the market and purchase more stocks. So what I did, I took all my money out, and as you can see, like a month later, you can see stocks rebounding. And if anybody's familiar with 2020, if you own stocks during that, you had after that pandemic, after the crash, after the pandemic hit, the returns were great if you own stocks. And for me, when I took out the money, that was one of the biggest mistakes that I made, because when you look at people, the veterans, when it comes to investing, what they tell you is that you don't lose money that when you don't sell, if you don't sell, right? You never lose money if you don't sell. And for me, I sold because I panicked. I saw the market crashing. I saw, losing a lot of money, and it was just like, oh, I got to get the money out. But if, a person that had experience would be like, no, just keep your money in, because if you look at the history of the stock market, especially the S&P 500, right, that it always rebounds. It always goes back up, right? But not for me, being new to these things, and just being and panicking to see how much money you're losing. It's just the normal response would be just like, oh, I gotta get my money out, and then I'll get back in when it comes back up. But once I took the money out, and then you wait a couple of weeks, and then things start. You wait like a couple of weeks, like I think it was like 2 weeks, and you see that it's rebounding, right? And people in the money, and you're making, and people that kept their money in, they made even more money, right? And for me, like even throughout that year, even though, and I think a month later, like a month or 2 months later, I put money back into it. And even though that year I still was in the green, like anybody that owns stocks in 2020, you made money. And even though I made money, I lost so much money because if I had just kept that money that I had in there and not sell, I'd have made even more money. So for me, like the lesson I learned is like, even though there are market crashes throughout, a period of time, if you look at the history of stocks, or like especially when it comes to index funds, you see that they always go up, they always rebound, and they always give you good returns year after year. And for me, not having that experience and not having that, not understanding my tolerance for when, when there's a crash, obviously I put myself in a situation where I could have made more money than I actually had. And like I said, you only lose money when you sell. So for now, like going forward, now that I got more experience, and I now, like, even though I got some index funds, now I've invested in like ETFs. ETFs is something I've got into, and like I think the three ETFs that I've invested in, like VOO, which is Vanguard, which is, I guess that's also S&P 500, and then VDC, which is a consumer staples. And then the other one is VTI, which is the total stock market. So those are the ones that I invest in now. And now based on now that I've developed that experience, based on recent past history, even when there's a market crash, I don't panic. I don't even look at the stock market. Back when I first started investing, I was looking every day at the stock market. I would look at my portfolio. Oh, look and see how much money I made. Now, it's like I'll check it probably every month. Because I'll check it every month just to see, make sure the money is deposited and just see where it's allocated. But I don't even sweat when there's like a crash. Like even when I see the market dip, I'll just say, oh, that's another buying opportunity. And now I don't look at it as panic. I don't get panicked that I don't be like, oh, I got to take my money out. I just every month I do the dollar cost averaging. I make sure to invest money every month, a certain amount every month, and I don't even worry about it because I know even regardless of what's going on in the market. Like if you look at history, I know I understand like where the market is going. If you look at these returns, it always goes up. And obviously, 2022, even though there wasn't a good year for stocks, I'm not worried about that because if you look, like I said, you look at history, you know that it's going to go up, and that's how I look at it going forward. I don't panic when there's a market dip. I don't get discouraged. I get scared and get fearful. Like, oh, I got to take my money out. I just continue to stay the course, stay disciplined, and make sure that every month I'm depositing the same amount of money into my accounts, and and understanding that history shows that the stocks will go up. So I think if you're someone that's thinking about obviously, if you're someone that's thinking about investing in the stock market and you're worried about losing money in the stock market, obviously you want to make sure you have a plan in place where you're allocating a certain percentage of your income. You don't want to throw all your money into stocks. Obviously, you want to, depending on your game plan, whether it's 5, 10, 15, 20% of your income, you want to make sure that you understand that you're allocating a certain percentage every month into investing, assuming that you have everything taken care of. Your bills are paid, you're saving, and you have all your debt. You have all debt cleared out. So you want to make sure before you invest, you want to have all that taken care of. So I think if you're someone that's worried about investing, I think as long as you have a discipline plan and you understand how the stock market works and you understand your tolerance for when things happen within the market, I think you can have the confidence that you'll do well in the stock market, and that's what I'm learning. I'm developing that tolerance and that understanding that I'm not worried when things go down. I look at market crashes or dips in the market as an opportunity to buy more shares, and I think that's for me that's the game plan that I got going forward. So hopefully my story has helped you out a little bit, provided you some confidence. And obviously this isn't financial advice. It's just me, a guy on YouTube, just sharing his experience. So if you got any comments or questions, make sure to leave it down below. Hit the like button and share, and if you haven't done so already, make sure to subscribe. All right, so you guys take care and have a good one. Later.